Hong Kong bulls may have taken a breather since the start of 2018, but that hasn't dented interest in listing here. Despite the benchmark Hang Seng Index shedding around 20% of its value since January, Hong Kong still managed to surge to the top of the IPO league standings. The jump was boosted partly by the arrival of tech firms with dual-class share structures.
On the face of it, it looks like that there is reasonable demand from investors in stocks of this kind.
Dual-class share listings give specific shareholders like founders voting control. Smartphone makers Xiaomi and super app Meituan Dianping were the first such offerings in Hong Kong. Together, they raised around $9 billion. The Hong Kong exchange made a big push to allow these listings after losing out to New York on Alibaba and other tech titans. But critics like the Chartered Financial Analyst Institute, which recently conducted a review of dual-class shares, say there's insufficient protection for minority shareholders.
And investors have a huge amount of optimism and confidence in the market. And in times like this, they're less discerning about the quality and the corporate governance standard of the companies that they buy into.
Highlighting the potential risk was the recent arrest of JD.com's founder, Richard Liu, over allegations of sexual assault in the US. As the holder of 80% of all voting rights, it meant the company board couldn't hold a formal meeting until he was released.
I guess these risks don't really come to light and people don't really hone in on them until you actually see a case and a high-profile case where they really make an issue.
One key recommendation suggested to protect investors is to introduce sunset clauses. Now, they would convert super voting rights into regular voting rights over a period of time. But any such regulation may make Hong Kong a less attractive destination for these new economy companies it's been trying so hard to woo.
It comes down to a competition between the exchanges here and the exchanges in Singapore or in the States that are likely to win these listings. And in the end, it's the controlling shareholder that decides where they list.
But loosening regulatory standards for the sake of winning new listings is precisely what many fear. Patrick Fok, TRT World, Hong Kong.